According to the latest Consumer Price Index, inflation is not what it was a year ago, but price pressures remain. And as those price pressures continue, consumers and savers are left with mixed messages, not only on inflation, but on the future direction of interest rates. Before we begin, remember to like this video and subscribe for more economic updates. First, let's look at the inflation numbers. In May, the headline Consumer Price Index increased just 0.1% for the month. That was considered a modest increase and helped rein in the annual number, which rose an even 4% last month, down from 4.9% in April. That's the lowest year-over-year increase in CPI since March 2021. That's the month that kicked off the current cycle of higher inflation. It's a far better inflation picture than the one we had to look at last June. A year ago, annual CPI reached above 9% for the first time since 1981, and the national average price of a gallon of gas went north of $5 for the first time in history. That said, the core inflation number is not yet as positive as we might hope. Excluding food and energy prices, CPI increased 0.4% in May, a faster pace than headline CPI. As a matter of fact, monthly core CPI has increased by at least 0.4% every month since December. Last week, the Federal Reserve elected not to raise interest rates for the first time in the last 11 policy meetings. At the same time, Fed officials suggested we'll see another 2 rate hikes before the end of the year. Those increases would put the Fed funds rate at its highest level in 22 years. But here's the thing. Even with those interest rate expectations, it remains unclear what the Fed actually will do going forward. Last week, the Federal Open Market Committee said that it will be their assessment of future data that determines how they proceed from here. Fed Chair Jerome Powell said part of what might guide the Fed's hand is fallout from recent banking events. Fallout he believes is not yet in evidence. According to the chairman, we don't know the full extent of the consequences of the banking turmoil that we've seen. It would be early to see those. Former senior Fed economist Vincent Reinhart had this to say in reference to the central bank's next scheduled policy meeting in late July. The data probably will be a little bit more ambiguous. The fact is, they won't know much more in 6 weeks. Chances are they'll be more confused in 6 weeks. Those of you who saw my 2023 preview video back in January know I suggested unpredictability would be the theme of this economic year. It does seem unpredictability is indeed what we're getting. Until next time.